I just spent 12 hours researching and analyzing Netflix, and I'm taking you along for the ride. We'll be digging through 10Ks, financial statements, earnings calls, and at the end, I'll be modeling it to see if I think it's worth the buy. So I was doing some industry research, trying to figure out what sectors have been doing well over the past year and which ones haven't. So the communications and the consumer discretionary have both been doing pretty bad. In the communications sector, Meta and Google, both of those have had really high capital expenditure, and so keeping an eye on those. But that's kind of where those have been tanking a lot. And then came across Netflix in there. I've owned Netflix before. I know it's a good company. I owned it back at 22, and some people I follow have started talking about it. It's made their way onto some of their watch lists and even some of their buy lists. So I'm gonna jump to the overview, and maybe I'll end up modeling it. So the company's not really in as good of a spot as it kind of hoped it'd be. The earnings have kind of been all over the place, and their net income hasn't been as good as I would like it to be, and also the profit margins are kind of going down, so that's not the greatest. But compared to their PE ratio, the revenue growth and the net income growth still isn't bad, so it still could be a really good play. As for why it's increased so much over the past couple of years, leading into the middle of 2025, a lot of that has been from they've been cracking down on password sharing. That's kind of been the number one thing that's kind of kept Netflix in the news and kind of kept them apart from other ones. I know other ones have been doing it, but not to the extent that Netflix has. And then also they've had a couple of different tiers. So they have an ad-supported tier, they have like multifamily deals and stuff. So they've kind of had that too, which has kind of helped them. And then also they've just been increasing the price year after year, quarter after quarter of the subscription. So it's just been constantly going up. And so that's why they've been hitting such a good revenue growth and good stock price growth. But getting into September of 2025, they really missed their earnings, and that's kind of where it started to go, and that's where you see that 45% decrease. But they've been slowing down on their growth. Their margins are decreasing, so it's kind of getting into a kind of a hairy, scary, place. But the engagement too has also been plateauing, so that's also a big concern. View hours really didn't grow that much, and so I mean, if that's slowing down too, it's going to be a big concern. As for margins, a lot of that's coming from the upfront cost of new deals or new videos or whatever that are kind of slowing down. So that's kind of going to be interesting to see how that plays out. And then one thing that I'm actually really annoyed about is they've been reducing their transparency. So they no longer show their quarterly subscriber numbers, which is a little annoying for me trying to model it because that could be a way that I was maybe going to go and do and model it. So I'm gonna have to figure out a different way to kind of figure out if it's a good deal or not. Um, as for acquisitions, they have Inner Positive. I've honestly never heard of it, so I have a question mark there. So I'll have to dig into that when I'm getting into the 10K. And then their 2030 targets are looking a little sketchy, so we'll have to see how that it lands out. But those are kind of the concerns, so I'm going to keep those in the back of my mind. But the industry's been down a lot, so usually when the industry's down, that can mean there's some good deals in it, but also it's down because they're concerned for the consumer. So consumers are getting hit, and so that can affect margins. So I'm gonna have to keep that in mind, especially when I'm doing my bear case. It's a value stock. The size is a large cap, and then their moat is decent. I think they're kind of still the industry leader, right? If I'm saying, hey, what streaming service are you using? Netflix is going to my mind first. So if I'm choosing one, I'm probably choosing Netflix. So if I'm having to cut down on them, right, I might throw out a couple of different ones, but keep Netflix. But just because that is there doesn't mean that's going to stay. And so I'm gonna have to keep that in mind while I'm modeling it out. And then my concerns going forward, one is profitability and growth moving forward. How much is that going to continue, or is this kind of a falling knife? Is this the start of a bigger, is that 44% decrease? Is that just the start, or is this the bottom? And so trying to figure that out is going to be kind of interesting, kind of fun to figure out. And then how much more can they also push those subscription costs? Again, we're hurting the consumer. Over the next couple of years, the consumer's already been hurting. I mean, they had a huge inflation since COVID. I mean, you've seen the inflation here through the company itself too, and so it's going to be kind of interesting to see how that plays out and if Netflix is able to take advantage of that or not. And then going into here, that again concerns me because it's like, how much am I going to be able to trust Netflix with my money and with their company to do well? So that'll be interesting. All right, the 10K has been pretty phenomenal so far. So the margins have been slowly increasing over the couple of past years. 2023 to 2025 has been just amazing, amazing for the company. So the revenue's been increasing a ton. The cost of revenue really hasn't been increasing nowhere near as much as those revenues have. Sales and marketing and the research and development have been slowly increasing, and then the general and administrative has been pretty much stable. So that's been phenomenal to see. The net income's pretty much doubled in that amount of time, just a couple of years. I mean, that's just amazing. That's why you've seen the stock grow at such amounts. On top of that, they've also had a bunch of share buybacks, and I don't know exactly how much is moving forward, so I'm gonna have to figure that out before I go and put that into the model, but I'll keep that in mind. And then also when I'm going into modeling, I'm also going to take a peek at different regions, but I think I'm probably just going to do it as a whole. I mean, sure they have different regions, so that'll affect things differently, but really it's going to come down to just the customer base. So I'm going to be having to dig in and see what new TV shows and what new movies they have planned going forward to see if I think that Netflix is going to have an edge against competition. Looking into the past, though, I still don't really know what caused the September dip and what really started the downfall of the stock. So I'm gonna have to do some more digging into that, and I'll have to listen and maybe read into that earnings a little bit. But moving forward, I'm going to be looking into those 10 Qs, figuring out what's been going on in the past couple of quarters, and see what's been going on in the past half of the year here, and try to figure out what I want to see moving forward. All right, so I figured out what was causing that big miss. So main thing was really just a tax hit through Brazil. So that really caused the EPS to decline and the operating margin to decline. So didn't talk about it when I was doing the 10K, but usually I just do the US and the state income taxes. But because there's a bunch of different portions that are in other countries, I'm going to have to use a lower rate than normal when I'm modeling it. But I haven't figured out exactly what I'm going to do, but it'll be lower than that normal 21%. It'll probably be in the mid to higher teens. So just finished up the end of 2025 fourth quarter earnings call. I just wrote down some notes that are going to be helping me out when it comes to actually modeling it in terms of where margins are going to be in which half of the year and kind of what's planned on. But I did want to note that I'm a little bit concerned with if things flop in this year, it could be really bad for them in the longer term. Um, Going into one of our concerns from earlier, they did talk about that a little bit on it, so I was kind of glad to hear about that. Really, they're just saying that viewing hours isn't their only metric of measuring retention and how much people actually care and how beneficial it is to their customers, and so they've been expanding that a bit more into what they're doing, and so that's caused some a bit more of less concern, more happiness with that. So that's been kind of nice to hear about. And then they've also talked a little bit about Japan and kind of how they have different regions. So I'm still thinking about modeling and okay, do I want to separate them? And I still think I'm going to do them together, but keeping that in mind when it comes to that. And they also talked about the Warner Bros. Acquisition. It didn't go through, but they were talking about it as if it was going to go through, and I think they were planning that it would go through. They got outbid, so I'm okay with that from a business standpoint because I don't I wouldn't want to overpay for something, and so they obviously didn't, but a little bit concerned there with that and how much they're actually spending there. So that'll be interesting to think about. Before I hop into the actual quarter one and quarter two of 2026, I'm going to hop in with management and see kind of where they're standing at, how long they've been in, and read through the proxy statement to get a feel for them, and then I'll get into that. The CEO and founder is finally stepping down, uh, taking his place. They kind of have been doing this over the last couple of years as two guys. They've been doing quite well, I think, and the management team overall has been quite, I mean, they've been around for a long time. Some of them, like half of them are in the early 2000s, others are in the 2015. So a lot of them have a good amount of experience. As for pay, a lot of it's coming from based off of revenue and operating margins. So I'm good with both of those numbers. And so I'm pretty happy with management. I just finished up the two earnings calls. Um, First earnings call, they kept the same guidance that they had from the one before. They talked a little bit about how they were builders, not buyers. They were talking about the Warner Bros. And how it was a little bit overpriced for what they wanted, and it tested their investment discipline. So it made me earn a little bit of confidence for them again, kind of with the mergers and acquisitions to see if they're doing what I think are smart plays. And so that was really good to hear. And they also talked about how their old founder is finally, or is fully stepping back, I should say. And so I found out that one of the management team, one of the two CEOs, he's known him since '99. So that added a little bit more confidence as well into the management team. Getting into the second quarter, the reason for a pullback was they pulled back their quarter three guidance. I really don't care about short term quarters. They did narrow down their full year guidance, so I was able to see a little bit more into their picture for the rest of the year, which is nice. And then they also talked about the share repurchase. I finally got that number. I've been hunting for it for a while, so I was really glad to see they touched on that and they added a bunch. They added another 25 billion allocated, so that'll be really nice to see how I'll play that out when it comes to modeling. And then they also talked a little about their acquisitions. They had that Interpositive one. I talked a little bit about in the overview section, and so it was really good to hear a little bit about that and how that's really just helping them with AI and post production, just making better quality films, and it's helping their producers produce better content. So that's been really interesting to hear about. I'm gonna go and dig into the industry and then set the model up, and then I'll come back with you guys. All right, I finished up with the industry research. Really just trying to take a peek into the industry, just kind of seeing where things are going into the future. There's really plenty of growth. A lot of it's going to be coming from markets other than just the U.S. I also took a peek, kind of. You can see with these two graphs over here a little bit. You can't really see that one as much, but really those two are just kind of giving me an eyeball at kind of where Netflix has been. Making my way down here to the Netflix subscription over the past history. Really just kind of seeing how much it's been increasing, and you can also look at how much inflation has been increasing too. So kind of just keeping an eye on those, and at some point, right, how much are they going to be able to outperform the increase that you're seeing in inflation? Switching over to the model, I've already planned out the main base, and I've worked on just the revenue portion for you guys so far. Really just getting into my numbers that I'm inputting there for growth, keeping it in line with that 1 year that they have predicted with their earnings, um, that 51 to 51.4. So kind of just keeping that broad range there. And then over here, I kind of mapped out what I think the percentages growing forward is going to be. Really getting down to that 10.5, just coming from this amount from each of these different segments. So really, you can see that large from the global market and then a little bit from within, but that's kind of where I'm seeing things going out. I'm gonna figure out the cost and everything, and I'll come back when I'm at operating margin. All right, I just finished putting the inputs in for the model. So I have margin slowly increasing, not as much as it has in the past, but still at a decent rate. And so I think that's a good rate, and so I'm happy with that amount. As for sales and research and development, I have them still as a percent of the total revenue, but slowly decreasing over time, again, adding to an even better margin. So have that there. As for the general and administrative, I kind of kept them at just a 3% increase year over year. I figure the only growth there is really going to be from inflation and not extra too much more other than just inflation. I mean, sure, there'll be a little bit as they're expanding, but not a ton. So I'm keeping that relatively small. That happens a lot with a lot of companies. So I'm pretty happy with keeping that pretty calm. As you notice, the company projected 31.5. My base model only has them at 31, but I'm okay with that. And going forward, it's going to be catching up to that. So that's something to keep an eye on, maybe when you're making your own model and what you want to do. Um, Tax rates, I had them still up at the upper teens, even though some spots in the global market will have smaller taxes. You also still have like that the tax scale like you kind of have with Brazil, and I'm still confident with keeping a higher amount there, and so that's where I put that. As for shares, the amount of shares outstanding, I have them buying back shares, so I map that off based on how much money they have, and so I have that mapping, and then the top would be they buy the most amount they can, and then obviously the bear case would be they don't because they don't have as much money to spend on that. So now it's time to see the model. I haven't actually seen this myself yet. I guess my prediction right now is that it's going to be about at a fair price. I think once you hit the bear side, it'll be a little bit on the buy side, and the bull side will be a little bit of the buy, and then the bear will be a little bit of the sell or avoid. So it's on hide and see. Just a reminder, this is not financial advice. This is for it being $73. Yep, and it comes in about that. Actually, I'd say that I mean, it could be a decent buy. I don't know if I'll put it into mine. I'll definitely keep an eye on it. If the stock price all of a sudden dips, let's see if it goes to 65. I mean, that's when I'm going to see a big jump. So I'm going to keep an eye on it, see what I want to do, and so yeah. Hope you guys enjoyed. Like and subscribe. Hope you have a good one.